Hello, you're watching Proactive. I'm joined by Jeff Rowley. He's the CEO of FRP Advisory Group. Jeff, very good to speak with you today. And you're out with your full year results this morning. You say you made excellent progress last year. Can you take us through some of the highlights, please?
Yeah, so it was obviously a year of real positive progress for us, and I think that's reflected across all of our service lines. So whilst restructuring is the largest part of our business, we saw positive contribution both from corporate finance, debt advisory, from forensics, and from our newly formed financial advisory pillar as well. So it was one of a year of contribution both across our regions, across our service lines, which culminated in the overall results.
How about some of the financial highlights, Jeff? Because they look pretty impressive. So revenue up 23% to £128.2 million, adjusted underlying EBITDA up 37%, and also a pretty strong balance sheet at the end of the period.
Yeah, so what's encouraging on the top line growth is the fact that the majority of that was organic. So roughly 19% of that growth came through organic. There was some contribution from our M&A activity. And then again, as regards our operating model, what's really encouraging for our shareholders is the fact that we've demonstrated that top line growth converts into profit. And that was a really strong growth of about 37%. And then again, as a professional services business, obviously the largest asset we hold in our balance sheet is work in progress. And we were really encouraged by our ability to demonstrate our ongoing ability to turn that into cash, which has led to a really strong year-end balance sheet with those cash balances that were held.
And you mentioned all five pillars are kind of firing on full cylinders. So you're restructuring FRP Corporate Finance, also Forensic Science, and also trading for the first full year of your combined financial advisory pillar, which you say has been positive.
Yes, yeah. So on the financial advisory, that was the bringing together of various colleagues in the area of sort of financial due diligence, vendor due diligence, pensions, valuations. And again, that's all about just making sure that we're giving a clear proposition to our clients around where we can support them on. On the corporate finance front, really good finish to the year. Undoubtedly, that marketplace has had its challenges as, we've entered into a world of interest rates, some sort of people stepping back in terms of trying to work out the valuation gap. Recent conversations with colleagues is that the world seems to now be dealing with interest rates quite well at one level. So M&A transactions are taking place. That valuation gap has narrowed down. And then forensics, the reality of life is that we are living in a world where disputes will arise, and whether that's in respect to sort of corporate transactions that have taken place, sort of regulatory investigations, or unfortunately on occasions areas such as fraud where people need to establish what's taken place. So as a combination, really good levels of activity, and with our largest service offering of restructuring, again, some really good quality mandates, some of which are sort of fairly media worthy, most recently things like The Body Shop. But again, in the way we're dealing with those transactions, that's a multidisciplinary. We've got colleagues from various service lines making sure we're delivering the best service we can on those projects.
Jeff, you mentioned the strong organic growth, but you also talk in the commentary about selective acquisitions. You made a couple of small acquisitions post your year end. So you made a May acquisition of Hilton Baird Group, that's in Southampton, and also more recently, in fact, last week, the acquisition of Lexington Corporate Finance. Are you looking for more opportunities like this?
Yeah, so our stated position in terms of what our value proposition is to sort of have a mix between inorganic growth as well as selective acquisitions. And when we talk about selective, we've settled on quite a clear acquisition criteria. So in a very hierarchical sense, our first one is, can we get comfortable there's a cultural fit? We're a people business, and how our people interact and how they work and go to market and serve clients is really important for us. And we've worked very hard at having a collegiate environment. So knowing that if we're looking at an opportunity that both we would like to come together with that target and the target would like to come together with us is super important. And if we get positive on that, then we need to look at our second criteria, which is there a strategic rationale? And that doesn't have to be something truly strategic, but is it a new service line, or is it a extension of an existing service line? Or as was the case with Lexington, that was our first office into Wales. So it's geographic. And then finally, on acquisitions, if we can get through those 2 points, do the economics work for us? So we want to pay a fair price for businesses that we're acquiring. We don't want to overpay, but equally a transaction needs to work for the vendor. So it's trying to find that balance. And if we can do that, then we're very happy to acquire. Equally, if we don't see those criteria being met, we're very happy to say that we're not going to transact for the sake of transacting. And at the moment, we continue to have a sensible pipeline of opportunities across service lines. And we very much hope that if we can get through those criteria, that we'll be able to make further announcements in due course if it's the right transactions for us.
I mean, looking forward, you did say that there is a healthy M&A pipeline at the moment, and you're encouraged by activity levels across all 5 pillars, Jeff. So what does the current financial year hold in store?
Yeah, so we've started this year with positive momentum. We're the board is comfortable that in terms of our current guidance, we're encouraged by our ability to meet that. On the M&A front, yes, there are live discussions that at the moment actually that's across 4 of our service lines, so nice diversified opportunities from there. And as I say, if those opportunities can be progressed to the point where we are comfortable that transacting is in the interest of FRP as a business and in the interest of our shareholders, then hopefully we can make further progress on that front alongside our organic growth as well.
Well, I hope you'll keep us updated on that progress. Thank you very much for speaking with us today, Jeff.
Thank you, Stephen, for your time. Much appreciated.
Very welcome. Jeff Rowley, CEO of FRP Advisory Group.